Welcome back, everyone. Let's get straight into this. Bitcoin is sitting at 73k as I'm recording this. The last few weeks have been rough. A war shock, a sharp crash, sentiment in the gutter, and now you've got politicians calling it a Ponzi scheme in major newspapers. I completely understand why people are nervous, but here's the thesis. There are three things happening right now on the chart, on chain, and in the regulatory environment that most people aren't connecting together. And when you see them side by side, this market looks very different than the headlines suggest. By the end of this video, you will have both the chart picture and the positioning picture. And there's one regulatory story in the macro section that I think is the most underreported thing in crypto right now. Make sure you stay for that. Right now, Bitcoin is sandwiched between two major levels. Below us at 68k, the weekly 200 EMA, Bitcoin's 4-year average weekly price. Every major cycle low has either held this level or briefly weak through it before reclaiming it. Above us at 87k, the daily 200 EMA, that's the ceiling Bitcoin needs to reclaim to shift the structure from recovery to expansion. We're at 73k, right in the middle. Now, here's the most important part. On February 28th, the Iran conflict sent Bitcoin crashing to 63k, briefly below that weekly 200 EMA. And within a week, it climbed back above 73k and has been holding. That reclaim is a technical thesis. I've seen this pattern 3 times before the COVID crash in March 2020, the China mining ban in May 2021, and the FTX collapse in November 2022. In every case, a sudden external shock, a brief violation of a key long-term level, a reclaim, and then significantly higher prices over the following months. If you're looking at positioning around levels like this, Bitunix is what I personally use. Link is below, by the way. Fear and greed is at 23, deep extreme fear, and the MVRV score is at 0.61. That second number is worth understanding. It measures how over or undervalued Bitcoin is relative to what every holder actually paid for their coins. Below 1 has historically placed Bitcoin in the undervalued accumulation zone, the same readings we saw at the bottom 2018. The March 2020 low and the 2022 cycle floor, not a guarantee but a meaningful data point. Meanwhile, according to sentiment, large wallets holding 10 to 10,000 Bitcoin now control 68.17% of Bitcoin supply, up from 68.07% a week ago. Coins quietly moving from smaller reactive hands into larger patient ones. And spot Bitcoin ETFs just logged their first 5-day inflow streak of 2026, pulling in roughly $767 million in a single week. Institutional money coming in through regulated channels while the crowd is scared. That combination doesn't usually happen near tops. But here's the part that could actually break this setup, and I want to be honest about it before I get into the macro picture. The one thing sentiment is watching for: retail wallets starting to reduce their holdings. Historically, the cleanest bottoms form when small wallets sell and whales absorb. The whale side is moving, retail hasn't fully capitulated yet. That's the missing confirmation, and it's the risk case. When I'm placing trades around setups like this, I do it through Bitunix. Link is in the description, by the way. Quick macro picture: the dollar has been strong, which create headwinds for Bitcoin's short term. During the Iran conflict, both Bitcoin and gold sold off when the dollar surged. But Bitcoin recovered faster and more cleanly than gold, which is a behavioral data point worth noting even if it's not conclusive. Now, the story I think almost nobody is paying enough attention to: the Basel III banking rules, the global framework governing how much capital banks must hold against investments, are being updated in 2026. Right now, Bitcoin carries a 1,250% risk weight. That means for every dollar of Bitcoin a bank holds, it must keep a dollar of reserve capital sitting idle. Gold and cash, 0% risk weight. Investment grade bonds, around 75%. The gap is enormous and is being the silent wall keeping bank capital out of Bitcoin for years. The Fed recently opened a 90-day public comment window on how these rules get implemented in the US. If Bitcoin's risk weight is revised even slightly downward, analysts are calling the potential liquidity unlock huge. Bank balance sheet capital that has been structurally locked out potentially coming in for the first time. This doesn't move the price this week, but it's the kind of shift you want to understand before it becomes front page news. So here's the full picture. Chart 73k above the weekly 200 EMA floor at 68k. Below the daily 200 EMA, target at 87k. Iran shock wick reclaimed, structure intact. Positioning: MVRV score at 0.61, historically deep value territory, wells accumulating think fear and greed at 23, 767 million in ETF inflows, Basel changes building in the background, base case, hold the floor, retail capitulates, ETF flows continue, Bitcoin makes a run towards 87k, risk case is retail doesn't give up, weekly 200 EMA breaks on a close, retest of the 63k to 65k zone, so the key level to watch is 68k, every weekly close above it keeps the structure intact. We'll track this week by week, let me know what you're seeing in the comments. So thank you so much for watching, subscribe if you haven't already, and like the video as well, much appreciated, and I will talk to you guys in the next one.